Welcome to part 3. Lender paid PMI on a conventional loan is today's topic. Come on back, it doesn't get any better than this. Hey there, potential home buyers. Brandon Lewis here with Integrity Home Mortgage, coming to you with another great little video with some mortgage tips for you. And again, this is on the 3-part series of private mortgage insurance on conventional loans. Today, we're going to take a deep dive into lender paid PMI. Sounds pretty good, doesn't it? All right, before we get started though, please click that subscribe button, hit that bell as well. Want to make sure you get all the notifications for all our new videos coming out. We've got a lot of great stuff planned. Just a quick recap of parts 1 and 2 that we've reviewed already, and we'll bring those scenarios or the comparison back up in this video here. Part 1 covered monthly PMI. That's when the private mortgage insurance is added into your monthly payment as an extra component of your monthly payment. And once you build up 20% equity, then you can request to have that PMI removed. All right, and that's the most common way. That's what most people are familiar with, is the monthly PMI. A lot of lenders are scared to present the other option. So I always like to show my clients options. Part 2 that we did on private mortgage insurance was about single premium PMI and either paying that at closing or financing that into the loan amount. Another great way of eliminating the PMI or just handling it really quick. Like I said, the Band-Aid, rip it off, get it over and done with. And then today we're going to talk about lender paid PMI, which sounds great, right? Not the best name maybe, but you're definitely still paying for it. But this is a great option for certain clients. When I sit down with a client, we review all options, eliminate the ones that don't make sense, and figure out which PMI may actually give them a little bit of a benefit. So keep in mind, without PMI, you'd have to put 20% down. We wouldn't have a choice. That necessary evil there, so we've got to have it. Lender paid PMI is very different from your monthly PMI and your single premium PMI. When you select lender paid PMI, you're essentially saying that you're willing to take a slightly higher interest rate as long as there's no PMI in the monthly payment and there's no PMI due as a single premium at the time of closing. So what we do here is price in the PMI into the client's interest rate that they may qualify for. And again, you take a slightly higher interest rate compared to taking PMI in the monthly payment or the single premium. So it sounds crazy, right? I'm going to make some sense out of this and actually show you some benefits of the lender paid PMI. Now let's bring up our loan scenario, take a look at our lender paid loan scenario. This scenario, just like the other 2 parts, are based on the same client, the same qualifying factors, based on the same sales price of $300,000, putting 10% down, so a $30,000 down payment, and leaving us with a loan amount of $270,000. Of course, our estimated taxes and estimated insurance remain the same compared to the other scenarios. So again, everything's on an even playing field. These are 4 different options that one client would have on the exact same property. So again, make sure your lender's showing you options here, not just presenting you with monthly PMI. There are better options, and some may make a lot more sense for you than that monthly PMI. All right, so back again to the loan scenario. And again, lender paid PMI is essentially just saying, I would prefer to take a slightly higher interest rate than have PMI built into my payment or PMI due at closing as some type of a premium. So here we're going to see that the interest rate has changed from part 1 and part 2 of this series. So here we're seeing an interest rate at 4%. Now, just a reminder here, back on the monthly PMI scenarios, that had a rate of 3.5. So we're looking at a half a point difference in the interest rate in order to go with lender paid PMI. Now, it's not always an exact half point increase to the interest rate. It is risk-based pricing, so sometimes it could be a 1/4 of a point or 3/8 of a point. All depends on how much you're putting down, how high your credit score is, how pretty of a picture the loan application is altogether. All right, so again, 4% is the rate that we're gonna go, but we don't wanna deal with PMI in any other fashion on the loan, right? So going on down, we're not gonna pay any points. Our principal and interest is $1,289.02. Now, compared to the other scenarios, that's a little bit higher, and again, that's due to the interest rate change. Estimated taxes and insurance of $312.50 will remain the same as they are on the other scenarios in parts 1 and 2. And then the estimated total monthly payment, of course, we're going to see a little bit of a change here. So here you're going to have a payment of $1,601.52, which consists of the principal, the interest, your real estate taxes, and your homeowner's insurance. Now again, PMI is not built into the payment, nor is it due at closing as a single premium or financed into the loan amount. Again, in this situation, you're saying, hey, I'm willing to take a slightly higher interest rate in lieu of putting that PMI in my month payment or again, that single premium. Why would you ever want to take that higher interest rate? We're getting to it, I promise. We're getting close to it. Let's look at this real quick. So the payment comes in at $1,601.52. Compared to the monthly PMI that we covered in part 1, this is a $13 increase to the monthly payment. All right, so not a big deal right there, right? 13 bucks is not gonna make or break the decision for you or whether or not which PMI option is beneficial for you. But here's a couple of details that we definitely need to review in regards to finding the benefit within PMI, finding the best PMI option for yourself. So again, in this scenario, if you went with the monthly PMI, your monthly payment would have been $1,587.92. I'm gonna bring up the loan comparison here real quick. We'll get a side-by-side comparison of all 4 scenarios here. But I'm gonna focus on this monthly PMI scenario just for a second. So again, the payment would be $1,587.92 on the monthly PMI scenario up top, compared to the $1,601.52 on the lender paid PMI example. So only a $13 difference within the monthly payment to eliminate the monthly PMI and use lender paid. Now again, why would we want to go with a higher interest rate? Keep in mind, I'm not a CPA, I'm a mortgage professional and I like to stay in my lane. But last I checked, private mortgage insurance was not tax deductible. Consult your CPA, double check with your tax professional, but last I checked, mortgage insurance, private mortgage insurance was not tax deductible, right? So if it's built into your monthly payment or you pay it as a single premium, you're purely just getting the benefit of paying that and the ability to not put 20% down. But when we go with lender paid PMI, we have now converted that PMI into the interest rate, which is tax deductible, just like the regular mortgage interest you're gonna write off every year. Slight difference in the payment, but it could be a big difference when it comes to tax time and the amount of interest that you're able to write off. Now, keep in mind too, you would think, well, eventually the monthly PMI would fall off. It may be cheap, it's going to be a bit cheaper than that $13 difference there. Well, that is true. Eventually it will have to be removed. Keep in mind that there is a process to having it removed from your monthly payment there. You are going to incur the cost of an appraisal if you're going to show them that you've built up 20% equity through appreciation and through your loan payments reducing the loan amount, right? So you're looking at a $500–600, somewhere in that ballpark expense. Then you submit it to your mortgage servicer, request that they remove it. Now at that time, they do not have to remove it. They definitely do have to remove it when you hit 20% equity with the current loan amount compared to your purchase price. Now that's going to take some time right there. The monthly PMI, we may not shake as quickly as we think we'd like to. And it may not be as easy to shake as well. There's actually a government agency called HPA that's there to help homeowners in getting PMI removed. That gives you a little idea as to some battles that some clients have had with the monthly PMI. All right, so again, just looking down the difference here, cash to close is about the same other than the scenario where you're bringing the single premium to closing. So there's a big benefit there, as you don't see a big increase to the cash to close. And again, your monthly payment, including taxes and insurance, is going to be $1,601.52, only $13 higher than the monthly PMI. But now you have more mortgage interest to write off each year when you file your taxes. So my self-employed clients definitely love this option. It also prevents you from getting in a little bit of a battle with that mortgage servicer and trying to get the PMI removed and avoid that cost of the appraisal as well. All right, that's about as sexy as it gets in the mortgage industry there. That's what I call the Ferrari of the mortgage industry, Lender Paid PMI. So the key is to get you a benefit there. Let's at least get the tax deduction out of there. Without PMI, you'd have to put 20% down. That's a tremendous benefit. But other than that, let's try to squeeze a little bit more out of it, and Lender Paid PMI is your ticket on that. Now, if you have any questions or you have any crazy PMI stories, I'd love to hear them. Always love a good PMI story there. So hit me up in the comment section, throw the story down there. Would love to hear if you had challenges removing PMI or what your experience was. Also, don't forget to hit that subscribe button and that little bell as well. Want to make sure you get all the updates for our videos. We've got a lot of great content planned for this year. Once again, this is Brandon Lewis with Integrity Home Mortgage. Thank you for your time, and I'll see you on the next mortgage tip.